Hello, good evening, everyone. Welcome to tonight's webinar. My name is Nixon. Welcome to tonight's session. We will be looking at the tale of two giants, how US and Chinese economic ties affect Singapore. Right, so before we start the session, just allow me to run through a couple of slides here. Some of you may know this presentation is part of the series of the Learn from the Pros series of webinars and events brought to you by CGS International. We feature different market experts. For example, we have Mr. Wong Kong Hao for tonight's session. We have Mr. Ho Seng Fu, a veteran trading remisier, that will be doing a workshop with us online next year. So do look out for that. And of course, we have our own CMT, research analyst, Mr. Traviran, who does regular market technical analysis for us. So with that, welcome everyone to tonight's session. And before we start, just want to remind everyone that tonight's session, information shared, is for educational purposes only and does not constitute to any recommendation to trade or invest. So do your due diligence if you are to partake in the market in any way or form. We will be taking questions for tonight's webinar. All questions are welcome, so do feel free to key in whatever question you have in the Q&A box on Zoom. Try to avoid putting questions in the chat box because that can be a bit confusing for the speaker and for our site here. Unless, of course, you really cannot find the Q&A box on your Zoom platform, then do key in whatever questions you have, even on the chat box, and we'll try to look out for them. And if you wish to ask questions directly, you're more than welcome to. You just have to click the raise hand icon and I will come to you to double check and can unmute you so they can speak directly and ask questions to Kong Hao. So with that out of the way, I'd like to welcome everyone once again to tonight's session of Market Talk, A Tales of Two Giants. And I'm sure all of you are quite familiar with Kong Hao right now. He is a founder and investment strategist with Wikipedia Private Limited, his own firm, as well as a TradingView wizard, one of the 4 worldwide awarded this year. Kong Hao has vast years of experience as a sell trader from the Cymex floor right up to the sell side, working with different brokers and financial institutions, and does many training and workshops for different financial organizations throughout the years. So with that, I would like to pass the stage to Kong Hao. Kong Hao, please go ahead and share with us what you have for tonight.
All right, thank you, Nixon. It's always good to be back with your viewers, and thank you, Wei Jie, as well. Of course, CGSI for inviting me to be back again. 4th time this year, and we're gonna end with a report card of what we've shared on the last session, and I think more importantly, the title say A Tale of Two Giants, how the US and just Chinese economy is going to affect Singapore. In a way, it is going to be good. Let me share with you the reason why. Okay, so I'm going to share my PowerPoint. And right, so for the start, I'm going to share with you the inflation because it's been a key topic since 2022 for me. And I've been viewing a lot of postmortem about the US election. I think many of us also do the same as well. So I think the common postmortem discussion among the different channel is that the discussion of why Democrats have lost this election and why Donald Trump won the election here is that it all evolved around inflation. Yeah, so inflation, it hurts everybody. Yeah, so unemployment, it hurts few groups of people. Yeah, it could be thousands, tens of thousands, but inflation, it hurts everyone. Yeah, so that's the key reason why Democrats have lost to Republicans. And of course, the rising star China, is it sustainable? We're going to discuss that. China and between inflation, US and China, how is it going to pan out for 2025? And is Singapore going to take advantage or in good position to ride through this interesting 2025? Of course, I'm going to give you a brief outlook on the US market, but I will focus more on the China market and of course Singapore. And we're going to discuss about the 20 actively traded stocks. Not specifically, but I'm just going to show you the list of 20 most actively traded stocks relating to China on Singapore exchange around. So we're going to discuss that, followed by a time of Q&A. I hope to perhaps end the session in another 45 minutes time or slightly more. We're going to have enter a time of Q&A later on. Now let's get started. Now, I will not introduce myself much. So for those interested to find out exactly what am I doing, who am I, one way now I realize that it's good to find out from ChatGPT. So if you have, but don't do it now, maybe after the session. If you find that what I share is insightful and you want to learn more, and you want to check me out, find out more about myself, you just look for Con Hao in ChatGPT. I think there's some writing over there. So a disclaimer by CGSI. Just take a few moments to read about this. And that's my disclaimer. And what I'm going to share with you tonight is based on my own conclusion. And definitely I'm convicted to carry out my plan as usual. But that's for my own consumption. Right? So, but I'm happy to share in every platform given to me. Always delighted to share what I know. But if you're going to take action, please consult your broker, who is CGSI. Yeah. Now let's recap about our last session. So this is my fourth session with CGSI. So last session on 29 August this year, we discovered about some patterns here. So my work is always I like to discover patterns, and because I believe that patterns usually will repeat itself. But beyond patterns, my trademark is always how do I fuse in the fundamental development to confirm that the pattern that's what we're seeing is coming to pass. So we have to also back up with some fundamental as well. So I think that's something that's really exciting. Now, so on the 28th or 29th? 29th August, our last webinar, Nixon is always so supportive. It's always there. We discussed about STI. So we saw here the STI was at 3404 this year. So I reckon that I say that along the timeline this year, or end of this year, that was in August, if it ever close above this around 3004, close above. Now we can see that historically, if you look at what we're seeing here is the 3 months chart. But if you convert it to a 12-month chart, you'll see very clearly that this line at about 3004 yearly chart, that it kind of there's this inverted hammer. And along the timeline, the 3 month chart or quarterly chart, you can see that it's been so well tested over the last 15 to 20 years. Each time it tests, it failed on this yearly chart. And on this quarterly chart, it failed. It tested, it failed, it tested, it failed, it tested, it failed, it tested, it failed. Yeah, so for the last 15 to 20 years. So my objective here is that moving forward, I think Singapore landscape is going to be very different. Now, let me just give you a very quick answer. Is that our title here is that the tale of the two giant US and China. And I got this suspicion that the West may go through a very volatile period in 2025, which is already happening. And the China, Asia, ASEAN, we are preparing for that. And so China is a very key factor. Now, they're preparing for that. They are doing their debt clearance. They have a lot of debt. They're trying to resolve that. They are also trying to innovate from a low-end manufacturing all this while. Over the last a short 5 to 10 years, they have kind of transit themselves to a high-end manufacturing. But whether are they going to be successful or not, yet to see. But what I'm seeing here is that if there's a lot of volatility next year in 2025 for the West, I suspect there'll be a flight to quality. There are a lot of money around the world in different asset class, but when the market started to get volatile in the West, a lot of money are parked in the equities in the West, there will be some flow of fund into the Asia market. So on August 29th of August 2024, so structurally, if I could see that at any quarterly chart or yearly chart, it closed well above 3004, my strategy for Singapore market is no longer, I used to trade the range. Every cycle, 3-4 years, I will try to cash out. Around the low, about 2008, I will try to buy in. 3004, I'll cash out. So in fact, there's a few cycle for Singapore market. So for Singapore market, in the past 15, 20 years, you should not be too passive. You should ride on with the cycle. But having said that, the landscape have changed. So that was our discussion on 29th of August 2024. So what is today's landscape like for STI, the patterns itself? Now we could see that on the close of the third quarter, and it gave me a very clear indication that for the first time in history, yeah, also that may, I also want to wait until the end of the year. If you look at the yearly chart, in fact, this was a inverted hammer. So I'm going to continue to wait, but it gives me a quite a clear signal that if end of the year is close firm, not close back down to 3004, I would safely say that structurally the STI is not going to be the same of the last 15 to 20 years. So what I reckon that maybe there's some flight to quality from the West to Asia, and Singapore is a financial hub, by the way, we may benefit, and it's really happening. So this was what we discussed in August, but now structurally it is giving me a lot of hint. Yeah. And let's move on to the US market on the same evening. That's what we have presented, that I mentioned that the upside for US still going up, but there will be some volatility. So that was in 11th of July. If I'm going to project this historically, the 20 years of NASDAQ, the trough to trough, and I mirror it, you could see that if I use this peak way back in the year 2000, I project up. So 11th of July, I'm seeing a very interesting phenomenon that the whole market is the target kind of met, yeah, for the technology stock for US. So my forecast for US market on August 29 is that target seems met over the long run, and market will still go up, but it's going to be very volatile. So what is today the NASDAQ? Yeah, it's still around here, and that was 11th of November. It reached a high of 21,300, and today is about 500 points lower. So it's still hanging around here. Volatile moving forward, some resistance as well. So that's for US market. And my trading strategy for the US market, or my plan for the US market since 2022, it was to trade them. And this year moving forward is also to trade them. So is for next year. Why do I trade the US market? Because I do not want to invest in them because if you talk about now, it's at the highest point. So usually my style is that when I invest, I will try to invest at the beginning of the up move. So once it reaches a certain height, I would prefer to just trade them, because trading the market keep me very focused and very quick in my thinking. You have to understand that if I invest in them, I invest for the long haul. When I trade, I tend to be very sensitive on when the market start to move. Let's say, for example, south, I have to do a very quick exit, because you have to understand that if you're going to coin that I'm going to invest right here at the top, it means that then you have to understand where's the, let's say you want a bagel, which is double, what's the potential? I'm not exactly sure if from 20,000 up to 40,000, not the same compared to the last 20 years. So I would tend to just want to trade the US market. Now, let's talk about inflation, because inflation is the key and is still going to be a key discussion for next year, and I think a few more years to come. Why? Now, let's look at it structurally here. And this is the last 50 years of inflation chart. Yeah, so Jerome Powell wanted the inflation to come down to about 2%. So I give you an average of about 1.5 to 2.5. That would give us an average of about 2%. So since about the early 80s, you could see that inflation kind of hovering around the 2% mark, about 1.5 to about 2.5. So average 2%. And some note, a note that you have to observe here is that something have changed. The inflation over the last 40 years was a bit low, stayed very low. So is the interest rate as well. But the next 10, 20 years, I'm not exactly sure, because the landscape kind of changed, because what I'm seeing here, that this 40 years of downtrend has been compromised, been broken, and that's June 2022, it reached a high of 9%. Yes, inflation did come down. I think that's wonderful. But you could see that Jerome Powell is still very concerned. And I think the latest public appearance that he did mention that we are in no hurry to reduce the interest rate. So that is also giving us a hint that he's still very hawkish about inflation. Yeah. So you have to see that the structure have changed, have shifted, and there's always a risk that inflation may creep up again. Now, why I say so, because when inflation creep up, it means that the interest rate may not reduce. I suspect that the December interest rate may not reduce. It will stay around this price for a longer period, the inflation, or rather the interest rate. But on any uptick of inflation moving forward, then there's possibility that interest rate may even go higher. Yeah, which is no good for the stock market or businesses. Now let's look at certain radar, inflation radar that I'm looking at here. Is that number one is the yields remain high. Now, what is yields? The central bank will decide on the Fed funds rate, which is most of us very familiar with Fed fund rates. And yields are the lenders market, which is investor, like the banks, institution, they give out loan. They will look at the yields, yeah, or they will make decision. They will decide on the yields direction. So I would say that between the yields, or in short, is your mortgage rate. Yeah, these are called the yields because there's two years tenure, 10 years tenure, 5 years tenure, 30 years tenure. So in US, if you want to borrow and buy a house, you can go for the 30 years yield if you want to, but not in our context here. So, but in any case, you have to understand that the Fed fund rate decided by the the Central Bank of the United States, and the yield, they move in tandem together. And what happened here is that, yes, the Fed may have cut the Fed funds rate on 18th of September, and then it cut again somewhere last month or this month, but 2 rounds. But when he cut on 18 September for the first time, 2.5 years, when he cut at 50 basis point, but guess what? The yield, which is the mortgage rate, in short, is that it went up instead, went up quite high. So it also demonstrate to me that the investor or the lender are seeing that the borrowing rates or the lending rates are still going to remain high, despite the cut of the Fed by 50 basis point the first round. So that's point number one. We can continue to observe that. So it also represents that the inflation may not be, I'm not, based on this observation, I need to keep check on the inflation. Then the number 2 point is that gold is still in demand, which is true. Yep. And just by looking at price itself, I don't want to go too deep into gold because my topic tonight is not about the gold market. So, but just by looking at the price, gold is still around 2,600 plus, nearing to 2007. It also means that the mass market institution or retail still view that inflation is still there's a fear of inflation is still there. So therefore, there's still demand for gold, just looking at the prices itself. Then the third point is that the inflation radar is that any escalation of geopolitical tension, which is already there, but I do hope personally that won't expand further, but this is not our call, is already there. The Middle East, between the Europe, Russia, and Ukraine, you know about all this. So things may get expanded, so that one with no control continue to keep lookout on that, because that may break the floor of supply chain that will affect our groceries, our imports or export. Then the next point, a new one, will be the effect of Trump's tariff. Yeah, so he just announced that the last few days that he's going to put on tariff on their neighbors, North and South, in Canada and Mexico as well, not just on China. So all this tariff will also incur costs to the end consumer. So all of us will have to pay a higher price if that happens. He has made plans for it, but whether will he carry out, we just have to wait to see. So all these are some points that we have to take a look at. Inflation, it is something that we should be concerned about. Yeah. Concern is one thing, but I will see that it could have an opportunity because I think the theme tonight is that as there's volatility, but there's a lot of investor having lots of money. I think there's some flow of funds, maybe out from the West, I suspect, and maybe flowing into the Asian market. Just one point here is that I follow this FT podcast, Financial Times podcast, that one of the experts been monitoring the Warren Buffett. He said that recent months he have liquidated about 166 billion US dollars of stocks. So that's a clue that we have to gather as well. Why are these guys accumulating so much cash around? Now let's look at China right now. So the key topic is about China. I think we spoke about inflation is there to stay. But good thing for China, they don't have inflation, but they have some deflationary problem here, which may not be a good problem after all. But let's take a look at what happened to China. Now, so in our first run with CGSI, US market was hot. So that's our topic, riding the winds of the US market optimism. And so what was our topic back then is that the my proposition for the market since the inflation hit a high of 9% in June 2022, my strategy for the US market is to trade them. It will remain the same for next year. But my Asia market, when it hit the inflation hit a high in June 2022, it was to accumulate them. Now, accumulate them means that why do I buy them? What's the difference, the strategy? I also want to share with you some strategy here that you can take that as a reference point here. Accumulate them is that it means that I believe that the low is met, but I have no idea when is it going to go up. So therefore, I'm going to slow. I'm going to accumulate them just by a few counters, a few industry, and just to get my finger wet so I can study more of them. I've not decided to buy them. That was in 2022. But in September 2024, where China have this stimulus, so I get some clue, and I decided my strategy has switched from Asia market and accumulating them to perhaps buying into them. So let me explain how it works here. Yeah, let me just clear my throat there. I think there's some flu bugs going around, but I think something good here is about webinar is that even I have this cough, it will not affect anyone. Right. So 2022, you could see that the Singapore stock market was for the last 15 years has been range bound, but I suspect that we are moving into the first wave, second wave. But that was in 2022 and all the way before. It was range bound, but in this year onwards, I suspect that we may move into first wave, second wave. Of course, not talking about the third wave, the mega wave. But there may be some opportunity here. But then from 2022, I've been advocating there's a possibility of the first wave to come, that means break above 3,004. Why? Because during COVID, the whole Singapore have kind of transformed. We became a hub of everything, from tech hub to financial hub to pharmaceutical hub, trade hub, air hub, green hub. So there's a lot of potential going on here. So I would say that Singapore for long term is still undervalued, and there's a lot of hope and excitement going on around. Now let's study a little bit deeper here. So today we could see that in February this year, 2022 to February this year, my mandate for the US market is to trade them. Asia market is to accumulate them, and commodity is to buy them. Okay, but after 24 September 2024, when China have this stimulus, my plan have changed a little bit, which I'm going to explain to you later on. But let's look at from 2022 to this year, February. When US market, I say to trade them, you could see how volatile the market is. Could you see that? It's really volatile. Just February until today. It's just about three-quarter of the year. You could see how volatile the market is. So it's great for traders, but not exactly great for investor because you have to go through this major swing. Can you imagine that in February, you buy around here, it went up so high, but somewhere in the first half, after first half, it came back to the same level. So you have a lot of heart attack if you're not a trader. So you can see that commodities for gold, I'm referring to gold here, is quite straightforward. Yeah, buy, and here we are today. And for accumulation, and I'm seeing that first wave already started here, that, since 2022 to February 2022, when I was making my first presentation with CGSI, I'm still advocating to accumulate the Asian market, is that I think the low has met. Why accumulate the Asian market? Because I think the low has met, but I do not know when it's going to go up. So therefore, I accumulate in a small, measured way. I continue to collect the good stocks that I like along the timeline. But you look at Singapore here, is that this may be a first wave, second wave, third wave. Now, for those that just joined us, earlier I mentioned that how I invest is that I like to look at patterns. So I like to look at those that have stand still for the long time or the range market and suddenly just break up. Of course, it is not suddenly. There must be a fundamental development behind the structure. So I like to look at all these. One, two, and I think we're in the third wave based on this weekly chart. Now, China is getting very interesting here. Same structure since 2022 all the way to February 2024. I advocate to accumulate into Asia, but along the timeline, you could see how the Japanese market have fly and the Indian market have flew as well. Yeah. So, but now I think the China, I'm waiting for the last one, who is China, which is maybe happening. That we saw that it's been range bound for the longest time since 2022. If I can go back to 2022 to Feb, I accumulate them. I get into some China funds. And on the 24th of September this year, so of course we know the news that Chinese announced the stimulus package. So it gave me the first wave. And now I'm not exactly sure, are we in the second wave? I would not know until it start to move up to perform the third wave. So sometimes as an investor, we have to take some risk. So now I'm going to explain to you some fundamental reason why I have some faith that maybe this is the second wave in the making and maybe third wave to come. So I have to use the word maybe because like I say that all these are based on my personal conviction. It's always nice to as a platform to share. But again, you have to take your own responsibility. So please consult your broker with CGSI. How is it going to pan out? Now let's discuss about the China market because we could see that the development of ASEAN, Singapore, China, if China can do well, and I suspect and I also believe that ASEAN, and especially for Singapore, we will do very well. Okay, be it if inflation continue to move up in 2025, the West will have some turbulence, but I do suspect that there's some flow of funds, which you are seeing that already, that is coming into Singapore. You have broke about 3,004 and today it's at 3,007. Yeah, it's still hanging around there. Now let's look at China. I'm going to spend a bit of time, maybe about 5 minutes talking about China because we have to understand what are they doing. Now, there's not much writing about the China debt. Seriously, I don't have any article writing or some understanding about China debt. So I have to do my own research. And now I advocate that all of us will have to do that as well. So what I'm going to share with you is based on my own understanding. It could be wrong. So please email to me if you find that what I understand about China may not be too accurate because seriously, there's not much writing about the China debt. Now, let me explain to you how it works. Here's that in 1978, China was really rural. Yeah, rural area. I think those are 52 years old, like myself. You have seen when you were a teenager or child, when you look at the news, Channel 8 News, Channel 5 News, they report about China. So all these Chinese will ride their bicycle, have farmland. That was just about 50 years back. The scene is like as such. And then we have 1978, Deng Xiaoping visited Singapore. So now, if you want to understand China, you look at Singapore, you understand China better. So I'm going to explain to you that later on. So in 1978, we know the story here is that Deng Xiaoping visited Singapore, then he go back, and he kind of have a revelation that he want Chinese to be the manufacturer of the world. So he did. And from 1978, for the next 20 years, those very enterprising individual or became corporates, they grew very wealthy. So they have very wealthy individual corporates, but they're very frugal. So they became the manufacturer of the world. So they're very successful. So they take clue from Singapore because that's how we did it as well. We also, first, when we gained independent, we also have started with all this low-end manufacturing. So they did the same, and many individuals, corporates, they became very wealthy. So I would say that maybe in the period of in the 90s, millennium, for the last 30 years, they will have this plan of, since our people are quite wealthy now, but we need infrastructure. Yeah, so because the whole place is still very rural since about the late 80s or 90s. So the central government empower the local government, which is the provinces, to issue bonds. But who are the one that buying the bonds are the tauke and the local corporates, because remember, they're quite wealthy. And they're one buying bonds. So now the local government, which the provinces have the money, so they build on all this infrastructure, roads, railway, airport, urban utilities. And a lot of subscriber, many of the local wealthy guys, corporate, they believe in them and they invested in their local government bonds and built wonderful railways and whatever. So if you go to China, you can see that. But come to a point where the past 30 years, I would say that the China GDP has depended greatly on their property market, on their infrastructure growth. But at this point in time, a lot of investors who can see that it's quite well built. Of course, there's still a lot of possibility, but in every growth, there's a cycle. When the cycle peak, it may drop. Yeah, because there's a cycle, there's a peak in their development. So the local investor could see that as well. So there's not many subscriber. So now what happened here is that the local government have some liquidity issue here. So now, so you saw this news. So we're all concerned about the US or rather the China debt. So am I, because I also want to invest in China. So before I throw in my dollar to invest in China, I have to understand about what is this China debt all about. Now, so what happened here is that maybe as Singapore, we don't quite understand the debt because we are a very small country. But if you look at our neighbor on the north, they may understand about what is central government and what is local government. So our neighbor on the north, their local government is called the district or division. There are different states, right? Yeah, it's called district division. But the one that have more say in their finances is in KL. Yeah, it's in KL. That's called the central government. So China is the same. The central government is in Beijing. So this local government run their own things, issue their own bonds. Now the central government, where I believe that they have a lot of reserve. Of course, how much they have, nobody knows. And I think they should not let anyone know how much they have. I suspect that they have a lot of money. So what they're doing here is that they just announced on the 7th November that they're going to issue 1.4 trillion US dollars, not renminbi, for the next 5 years on to tackle this local government hidden debt. So in a way, I will personally term it as it's a debt swap. Yeah, debt swap where, yes, the local governments have a lot of debt, but now the big brother, the central government, is going to step in to do a debt swap. I think 1.4 is just the first tranche. I'm still waiting for more announcement coming up. So I do not know how many tranches they are going to roll out. But as of now, it's 1.4 trillion US dollars. Is it enough? No, it's not enough. But I think, again, nobody knows how much the central government has. But that's the problem about the debt of China. Now, if I'm going to assume that I only can assume, say for example, that the central government of the China have quite a bit of money to manage their local government debts, then let's say I put aside this debt issue is kind of being resolved. And from what I understand here is that they will continue to issue bonds. Yeah, that's how they grow their economy. But they are not interested to issue QE because I think they study about the West model, about the Japanese model, and they don't like the QE because QE will create inflation, which is what we're seeing around the world. And what's the difference between bonds and QE is that QE basically is that the central government print money and invest into their own government bonds, which I think China do not like that. By the way, earlier I said that if you want to understand about China, you look at Singapore, you understand about what China is doing because Singapore are also not into QE. We don't believe in QE. And yes, do we have debts? Yes, we do issue bonds, which is very healthy because when we issue debts, investor willing to pour money to buy your debts, which is a good thing. Yeah, so QE may not be a good thing. Now, let me just move on. Why I say that to understand China, if you look at Singapore, you understand China a bit better, because in my growing up years, I also saw that in the 80s, late 90s, when I was serving my national service, I really been investing in stocks. I was carrying a pager around. And I still remember in the 90s, I was in the national service. I opened up the Straits Times. I feel so high, although I don't make the money, but I feel so high for where I'm from, that Singapore GDP was at 11 or double-digit growth. I still remember double-digit growth, means that 10.5, 11%. So China been through that, but now our GDP is maybe 1 or 2%. Yeah, so we're still growing, but 1 or 2%, because our economy has matured. So that's how economy works. So China is the same. They used to have double-digit growth, and now it's between about half of it, which is fine. So same for them. We used to be a low-end manufacturing for Singapore. But after that, in the 80s, we transit into a high-end other industry, service industry, financial hub, banking hub, you name it. So China is the same as well. From a low-end manufacturing, that you could see that they have transformed themselves, they are transiting into a high-tech economy. Let me put in perspective here is that if 3 years ago, if you're going to tell any investor that China is going to be a number one in EV industry just 3 years ago, I think many of the economists will not believe it, but this is how it is. And today, just this year, BYD is the number one EV maker. And they're number one in many things, including the green, battery, all these sectors. So you could see that their transition is from low-end manufacturing to high-end economy. So now, to me, the first part is important because the debt issue, they have to handle it. So the second part is that there's a growth, uncharted growth, which is from a low-end manufacturing that you could see that it seems successful, but we're not exactly sure, but we're going to continue to keep track. But what I'm trying to say here is that there is a lot of growth potential I'm seeing in China. And we're quite close neighbor, China and Singapore. I hope that they can use us as a financial hub more effectively. I think then this place will be even prosperous. So that's my whole point here. I hope you're getting this. And let's look at the bonds market. Now let's look at the bonds market because to issue bonds is important. Yeah. So, but at this point in time, I think a lot of bonds being issued are not like US, where there's a lot of foreign investors. So Chinese bonds are mostly at this point in time, but I'm sure they're going to expand more. The internal investor, they are investing into the Chinese bond. But let's look at the bond market because to me it's very telling. And this is the UK bond that over the last 40 years, you could see that, again, I draw this uptrend, and the UK bond is, in fact, is no good at all. Yeah. So if the bond is very telling to me because If the price is low, it means that the investor are not really interested to, when you issue the bonds, the take-up rate is not very high. So that's not very good news. And you could see the US bonds is the same situation. If I measure from the tip to bottom, during the Liz Truss, when she's the shortest PM or UK, because of the bond crisis. And I would say that the US bonds, if I'm going to measure in the same magnitude from peak to trough, the collapse is even more than the UK. So at this point in time, you could see that the US bonds are not doing well at all. But for China bond, of course, the history is very short. But if you're going to compare from period to period, say about 2016 to today, it's quite flattish and it seems that it's going up. I think there's some interest in the Chinese bond. So I'm not taking sides or anything, but as an investor, as a trader, I just want to be very neutral. I just want to observe the market and let the market tell me what the investors are doing. I just want to understand this and make a decision from the mass market. So the investor is telling me, or the market are keen in taking up some China bond. That's what I'm seeing here. Now let's move on. And this was what we discussed, maybe not with CGSI, but in other platform that we discussed about the Lion OCBC's security HS tag. That was when? That was recently, I think. Now, it's same structure, and it got me excited when I see that whenever there's this, I term it as the income stage or the range stage, when the market is stagnated, it's okay. That's why I think my mandate since about 2022 for Asian market has been accumulating them. Remember what's the difference between accumulation and buying them is that accumulation means that I believe that the low has met. Yeah. So I don't think that you go any more downside, but I'm not too sure when the market is going up. So usually I wait for this value stage where I could see the first wave with development. Yeah. So elite wave, it mentioned that the first wave, it means that the low is met. The rules, these are elite wave rules. That's not my rule. The low has met, but it comes with certain impulse with some fundamental development. So what was the fundamental development on the 24th of September 2024? The China for the first time have issued this stimulus. Never before in that kind of magnitude, but the announcement said that they're going to have more stimulus. So what we see here is that this is the first wave, second wave structurally. But earlier, fundamentally, we also discussed about China debt is an issue, but I have to take a step of some risk that I think the debt can be managed. And I do not think they want to go to QE, but I think they're going to continue to issue bonds. That's what I'm saying here. And there's also a potential of third wave. That would depends on how the new industry that getting into, how successful and the take-up rate will be. So all these require some risk, where at this point in time, I think I want to take some risk because the low side, the downside is quite measured. I wouldn't say limited because I may be wrong. So I'm getting into some China funds. How will I know when I'm wrong? When this price, say for example, this can be A50 index as well. It got the same, very similar structure. How do I know when I'm wrong? Is that when this price, it break below 2024 lowest point. Then I know that what I've invested is that I'm wrong. Okay, but I think it's a good risk to take that I'm taking on right now. Now let's discuss further about the market outlook for US, China, and Singapore. So US, earlier I mentioned that I'm more interested to trade them. So I have this 3 checklists. Checklist 1 will be the T-bonds, where we discuss the uptrend seems to have compromised. So I'll uncheck that. And the yield, at the point in time, although the Fed cut interest rate, but you could see that the 2 and 10 years tenure or the mortgage rate is still about 4%. It's still very high. So at one point it was inverted for about 2 years. Never before for 2 years very long. But now there's a risk of inversion may come. So this checklist is also I cross them. Now, why I have this 3 checklists? Because when this 3 checklist is checked, But now out of the three, two is unchecked, then I will not be passive in buying into US stock market. Yeah, because out of the three, two is unchecked, only one is checked. The inflation now is about 2.6. Yeah, so it came down from 9 to 2.6. But I hope that you stay this low, and gradually I hope that the bonds will move up again and the interest rate or the yield market will come down. Then there'll be three unchecked. And then if the market is conducive for US market, my approach for US market is to be a passive investor. But as of now, I will prefer to be a little bit more vigilant just to trade the US market. Okay, now let's move on to the landscape on Singapore market. Now, assume that I'm right. There's always a lot of assumption that as an investor we have to make. Assume that I'm right that China now is in second wave and moving into third wave, means that moving up. 1, 2, 3, moving into the third wave. Definitely Singapore and a lot of ASEAN countries will be benefiting. In fact, if you're not aware, maybe I ask you one question. You don't have to reply me, but I will tell you as I ask this question. Which country invests the most in Singapore? Okay. And who are we as Singapore, government and individual investor, which country we invest the most in? Now, the first answer is that who invested the most in Singapore is United States. The US invests in, that means in our land, which country invests the most money in us? US. But who we invested most in which country? Singapore government and businesses invest the most in China. Okay, we put the most money in China. Now, so if China prosper in this transition from low-end manufacturing to high-end manufacturing, if they succeeded, naturally we will also be relatively successful. And let's look at STI. This STI total return index include dividend that we could see that some of you that was a presentation the third run of this year 2024 with CGSI. If you look at STI, say it's boring. I kind of agree with you, but if you look at a total return index for STI, which include the dividend, actually STI is not doing that bad. Yeah, because many of us did not consider the dividend play. Now let's look at today. It's much higher. So I just put a rest here. That's what we have discussed on the 29th of August. Right. So as I suspect that in the event that China is successful, let's say this is from this stagnation of accumulation, it gave me the first wave, 24th of September. And now it's pulling back, it's doing a second wave. And I hope that it will go up. But of course, I can be wrong. But if it go up, I believe that Singapore will go up even more. In fact, we're already showing some sign that, in fact, it seems like we are we are leading China market structurally, okay? Yeah, but it's important that the China, if they do well, Singapore market, I believe we will do well as well. Now, I find that this report really interesting here is that from SGX, you can go to their website, you can retrieve this report. This was reported in October. So now sometimes you find that to invest in China is which stock to buy. Really sometimes it's so very difficult to shortlist what stock to buy. So earlier I did mention that I buy into China funds. So I let the fund managers handle the funds that I have. Of course, you have to pay some fee. But if you want to narrow down to individual stocks, in fact, in Singapore, SGX itself, there's a lot of individual stocks. Now, so this is the you don't have to buy the China stocks. You can buy Singapore listed stock, but they have their revenue more than 50% that is that means their stake is in China. So if China prosper, this company should do well. I would say the word will do well. So because 50% of the revenue derived from the China market. So give me a moment. So this is the 20 stocks that you could see. You can do a screen capture. I'm not going to isolate which one In fact, I pick up a few, but I'm not going to isolate which one I pick up because that's my whole intent. My intent is to shortlist for you. In fact, I didn't do the work. SGX did the work, but it's there. You go and study their structure. Based on the structure, let me just give you some clue here. Okay, just on the structure by the study, that you know that I like this structure of when the market stagnated, he gave me the first wave, and it seems like second wave now. So go and understand about this company. What are they doing? I have no idea. Yeah. So HPS, H Trust, also the same structure. Is range bound. It seems to me that's first wave, second wave. I'm just giving some demonstration here. Because as an investor, as a trader, I look at structure. Then if the structure strike me, I find interest in that particular contract or products or stocks, then I'll drill into the fundamentals to study about them. But as of now, I'm interested in Asia market, China related stocks, and Singapore. There's a lot of companies that have more than 50% of the revenue, which I described here, that when China prosper, if they make it, most of these companies should be also doing well as well. So structurally, I like this few, but I don't have all of them. One of them I'm very interested, but I haven't purchased it, by the way. Okay. Yeah, so I'm still studying then. And this range market, this is first wave, second wave. Yeah. And let's look at the structure, how wonderful it is. But of course, at the point in time, I also understand the fundamental. This was Yang Zijiang way back in September 2022. Yeah, so I have this weekly discussion case study group where I ask them everywhere, I ask them 2 to 3 questions. I'll expect the members to reply me based on my hints or my question. Okay, so I just share with them a simple chart like this with this few questions. Then what we could see here is that Yang Zijiang, and in 20th September 2022, it was about $1. So it's about here. But you could see same structure here way back to 2022 is that there's a pure range. Then when it start to move the first wave, usually I took an interest on the first wave, and then I will try to understand what is it happening. Is there any fundamental development? Yeah, so I'm just giving you some lifeline, how to understand about market and how to get into the market that's potentially will move, not just buying the market that it just stagnated. Yeah, so not much fun there. So I saw the first wave and we saw a second wave, and now today is at $2.58. So if you go back to drill all these stocks, you'll see a lot of what I mean by first wave, second wave. Yeah, so you're going to study about what is this individual company doing. And of course, I do believe in the China story. And we also go through some fundamental studies on the macro side. We're going to enter the time of Q&A. Now it's 8:29. I think I presented myself in an extended time. My apologies. But this is how we can get connected. I have this YouTube channel. So every week, if I see anything interesting, there's always something interesting to I observe them, and I will just post it on my YouTube channel. So I post it on every Sunday morning. I try to be consistent with the timing. And you can look for my YouTube channel. It's my name, Kon Hao, joined together, and you can subscribe to it. So that's my website, waypedia.com. There's some resources there you can visit and enjoy the resources. And last part is my email address, konhao@waypedia.com. So on the part about the understanding of the China market, so again, I say that there's not many writing about the China debt. So I try to read widely as much as I could in different sources, including the sources from China. So I try to form my own conclusion. So again, I can be wrong. If I'm wrong, my apologies. Do write to me which part I'm wrong, so I can be a better investor as well. So I'm going to pass this time back to Nixon for a time of Q&A.
Right. Thank you, Kong Hao. Thank you for a wonderful presentation. Yeah, sorry, allow me to clear my throat as well. Sorry. So just recovering from a flu, actually. Let me share my slides. So before we go to the Q&A session, I'm sure a lot of you has a lot of questions. I got a couple of my own that I will also want to clarify with Kong Hao. And it was a wonderful presentation, very, very clearly laid out with strategies and your analysis, and it's very easy to understand, not just what has happened, what is happening, and potentially what we should do in our investment strategy. Right. So before that, allow us to just solicit some feedback from you. We hope that you can give us some feedback online because this feedback allow us to really support the session, to keep bringing such wonderful session by Kong Hao and other market experts to you for free. Not just this year, but going to next year as well. And we are looking to have Kong Hao back at least for another 2 sessions for the next 2 quarters. So do give us feedback to support our educational sessions. Let me just give you the URL for that in the chat box. You can also use your phone to scan the QR code as well. All right, so let me look at the chat box. So the URL for the feedback is in the chat box. So do support us to give us the feedback. And also any topics that you like on how to cover in the upcoming session next year, you can also let us know. So with that, I'd like to bring us back to the questions. So any questions, do feel free to key in the Q&A box. We are more than delighted to come to those questions. There is no right or wrong question, so do feel free to just key in what you want to know, your any comments, any suggestions on what to look at. I think Kong Hao, if time permits, might also be able to share certain stocks on the charts if you are interested. So questions, just feel free to key in. I'll pass the stage back to Kong Hao.
Yeah, do let me know if there's any questions. If not, then Nixon, maybe I can start. If you have any question for me.
Yeah, actually, I have a pretty general question because, you know, for Donald Trump winning the market, right? It's a lot of people take it as a positive for businesses and the market as a whole. So, and then you shared just now that the US market is quite topish. There are also some that says that we are only halfway in the bull market. So what's your take on that? Do you think that we are really only halfway in the US bull market and Donald Trump will be the catalyst that will drive the second half of the bull?
Yeah, don't get me wrong, I'm not bearish about the US market. I'm still bullish on the US market because I do have a few sessions before the US election because the hot topic was US presidential election. So I share quite a few session with different partners. And then we did into the study about the different US presidents over the timeline. And no matter who wins, of course, then was between Trump and Biden. Then after that, changed to Trump to Harris. So the outcome is that what we studied then was that because Trump got some track record on between his win and the US stock market because he did the last round. So we could see that, and between Republican and Democrats. So we come to the conclusion is that whenever Republican wins, we could see that the stock market are more positively reacted for a few days to 2 weeks based on historical observation. So whenever Democrat wins, the market kind of have a 2 days to about 2 weeks of sell down. That's based on the observation and study we did. But then we come to a conclusion here is that whoever wins, whether Republican or Democrats, or in this case, Trump or Harris, after whoever who wins, in this case, Trump, the market over the long run, based on observation, is always moving up. So the understanding here is that yes, the market, don't get me wrong, I'm bearish. I'm bearish about the US market. I'm not. I'm just suggesting that the US market is going to get very volatile. Especially for 2024, if you're going to compare 2024 and 2023, just look at the yearly chart on between these 2 years, you realize that 2024 has been exceptionally volatile for the US market, and you stay that way. So volatility, sometimes if you buy as an investor for long term, you may have a heart attack because you may buy at the beginning of the year. So in June, it'll give you a lot of return, but maybe in September, October, you'll come back to the same price again. So you may not want to see that. That's what I call volatility. Why I say that I'm still bullish on the US market is this, because as long as that they can continue to issue the bonds and they're subscriber to their bonds, I think that's good news. And although the Fed is not doing the QE at the moment, they're doing QT, so that's quantitative tightening. But in time of crisis and need be, they still have an appetite to do QE again. So basically, for the US market, it's a very unique situation that they not just issue bonds, but they can issue QE as well. Yeah, but whereas the Japanese tried to do the QE, in fact, the Japanese started QE first, and the Americans find it's very successful. They follow the Japanese market subsequently. The Japanese failed in their QE because it didn't stimulate the market. But the Americans successfully did it, QE. So it's a very unique situation that they have. So in short, what I'm trying to say here is that as long as the US have the ability to issue debts, bonds, and QE when necessary, I think the market still have a lot of potential upside. Yeah, so one close and very near example is in March 2020, when COVID is at the beginning. So they issue the COVID QE. And look at the stock market for the US market. It was at a low point, and today it went up so much more. So I'm still bullish on the US market. So because of the bonds and QE, but earlier also study about the bonds, the US bonds structurally is not speaking very well to me. So therefore I say that I'm not exactly interested to be a passive investor in the US stock market. But not that doesn't mean that I'm bearish. It's just that I have to be very careful because as an investor, you have to understand that we don't just focus on the upside, but as an investor, we also have to take care of any potential downside risk. So whereas I think for Asia, the downside risk is pretty limited. So therefore, in 2022, I have a campaign of accumulating them. But since 24th September this year, I've switched my strategy for Asian market to buy them a little bit more aggressive, not just want to accumulate for to wait and see, but putting in some serious money to buy and hope to see that it will perform. Yeah. Yeah.
Great. Thanks, Kong Hao, for your clarification. We have a question in the chat box by Praveen. So he's asking, the challenge here for the Chinese market bounce back, when this might happen. So he's asking, when will the Chinese market bounce back?
It's $1 million question. Nobody knows. Like what I say now, obviously, if we believe in the wave one and now it's a wave two, which is retracement, which is at a retracement now. Now you're asking me when the third wave will come. I'm waiting, exactly. So I do not know. But I think going back to the safety net here is that, again, I think at this point in time, I suspect that when I invest in the Chinese market or Asian market, we are investing at a very low point if you look at the long-term picture. So I think the downside risk is pretty capped. It seems to me that the property crisis for the Chinese market at the moment is they have unraveled their crisis in the property market. So that's something that is comforted. The next thing that what we watching very closely is their government debts. It also seems that the central government for the first time has stepped in. Doing this on my personal term is called a debt swap between the central government and the local government. So I think there's some hope and the solution that they're offering to their the market itself. So I would say that the downside risk from what I'm seeing here could be limited. from what I'm seeing. Yeah, the debt issue, the property issue has coming to a standstill. Now I'm just waiting for whatever they have, whether it's a solar panel, battery, EV, you name it, all this technology. Once there's a pickup rate, of course, there's all this tariff. So we have to wait and see. Nobody knows. But there's also a lot of domestic opportunity within China itself. It really depends on their government, the Chinese government, how they're going to calibrate certain rule change that will also pan out the domestic consumption of their own industry as well. So I think there's a lot of avenue that the Chinese government can do. You're asking me a very good question because I also want to know when. But structurally, I'm seeing that there's a wave two. At least I know that there's a wave one. Maybe it's already in the making. So it seems to me that it's in a retracement wave two. So now I have to take a step of faith and take some risk. And that's what I hope to see, that wave three can be here. Yeah. So I have no answer for you, but in every trading or investment decision, we are always looking at, most of us are hoping for wave three to come. Yeah. But to me, at least what we address the issue here is that structurally we're seeing that, and fundamentally you're also able to piece into that picture as well. I think that's give me more added confidence of taking that step.
Great answer. In the Q&A box from MD, actually it's very related to what we just discussed. It's asking, what will happen to China's stock market when Trump slashes tariffs on China products and services?
I think the Chinese government has been getting ready for this because even in, I think some years ago, our own prime minister said that Trump can be coming back. That was, I think, in 2022, if I'm not wrong, in a public speaking engagement that he has. So if many politicians are saying that, so what's more for China? And in fact, the trade war started by who's the president that started trade war is in 2018 by Donald Trump. Yeah, I still remember the iconic picture that he gathered some construction worker. I think it seems like construction worker that took a picture with the coverall, Trump, and that's where this trade war started in 2018. So then it really caught the Chinese, I believe, by surprise. Wow, there's this trade war. So how are we going to handle this? But 6 years have passed, and I believe that over the last 6 years, because each individual can serve as a president for 2 terms. Yeah, so they know that Trump will come back. If we know what's more about the Chinese government, I think they potentially know that Trump may come back. So he came back. So I would say that the Chinese government have made all this preparation already, including what you're saying here is that during the election, they with all these measures that you're seeing here, that they do the stock stimulus program. I did mention very clearly it's just the beginning and there's more stimulus to come. So that's hinting the market. So exactly how much they have, of course, nobody knows. If you ask me this question, how are they going to manage this? I think this time round, it will not catch the Chinese, especially the Chinese government, by surprise. They are already making their preparation, and I think they are quite prepared to take on this challenge. So whatever policy that they may have, we just have to stay tuned. So in short answer is that I think they are quite prepared this time round compared to 2018.
Okay, thanks, Kong Hao. We have one question. In the interest of time, maybe this will be the last question. Unless really you have some pressing question, then do put in the Q&A box right now, okay? So a question from Steven is, still back on China, which sector will likely recover faster than the rest of China market should the recovery takes place?
Okay, so earlier I mentioned about, if you hear what I'm saying here, is that I don't want to mention about specific sector, but I can say that I liked, in fact, with another partner, that was partner means that partners like CGSI. Let me see, let me try to recall. It's all in August as well. So I share about no, that was in May. May this year. I share about Xiaomi. I like this kind of company where it's the same thing for every investment. Then in May 2024, I look at Xiaomi. I look at their financial statement, it's very healthy and they pay dividends. So I'm not recommending Xiaomi, I'm just giving you some ideas how to invest in them. So then I believe in China's story. Of course, the China's stock stimulus have not rolled out yet, but I do see that the structure of the range bound, and I hope that the first wave will come. So I do not know when, right? So, but it came on 24th September 2024. So then I'll be already very actively looking for gems. Yeah, so earlier I mentioned that I'm accumulating Asia stocks. Accumulating them means that I like a bit of here and there, but I'm not exactly know when it will fly. So I eyeball on Xiaomi, just to give you some idea here. Is that, so I look at certain fundamentals, they pay dividends, their ratio are good, undervalued. And something I like about Xiaomi was that they are into EV. So most of us know that Xiaomi is into handphone, lifestyle product, home product, all this and that. But they move into EV, and I like it because in order for a stocks to move into a third wave, say for example, either you capture a very big market, potential big market with your existing product, or you innovate, you produce a new product. Yeah, so what I'm seeing here was that in May this year, we know that a lot of companies, including Apple itself, try on EV, but then they pull out. They find it's not worth their time. They pull out. But Xiaomi take on EV, and I think it's going to be a good product range for them. And they successfully roll out their very sporty looking car, and I think they have still have very substantial orders. So that was something that I like. Just to give you an example, if you ask me which industry, I think for China, you look at the industry, I think you should know about EV, about batteries, something about more safe. Especially now, I think there's a new term moving forward for the industries that about the green industry, because they know that this is a market talk about right now that all of us know that Trump is not a very green person. Yeah, so but China is very green. Yeah, so I think there's a lot of green stocks that you can look at. I think there'll be a new growth to be. Of course, the other one that what I have given you is that the 20 stocks uh, um, narrowed down by SGX. You can take a look at them as well. So many of them, their ratio are quite fantastic, and many of them are also paying very good dividends as well. So I hope that will give you a not specific, but a good idea what are the stocks that you should be looking at. So certain the basic, you should not deviate from that, which is the continue to look out for stocks. If you want to hold them, make sure that they pay dividends, regular dividends, and the ratio are good. And also make sure that if you are banging on the third wave that I'm looking at, there must be a growth story that is coming.
Great, awesome sharing. All right, so in the interest of time, I think we should call the session to a close. But before that, just allow me to share screen again. So if you can see my screen here. Okay, great. So a quick reminder, tonight's recording will be put up on the Learn from the Pros page. The QR code is there. I will share the link as well in the chat box for everyone here, including the feedback form. So do look out for the recording. Allow us sometimes to upload the session. So probably by end of next week, you should be able to access tonight's session on the webpage as well as previous sessions by Gong Hao and our experts from the other Learn from the Pro series of webinars. And